The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 1st, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problema. You can always let your fingers do the walking. You can send me an email, Steve at TFNN.com. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading down 300 points to 24,724 is the print. S&P's off 26. She's trading out at 26.87. NASDAQ down 81 points. That's a little over 1%, 1.2% to be exact. 67.71 is the number. So you've got red across the board. Transports, I take that back, are up $4, so they're flat, trading out at 10,385. Spot volatility index up 18% as we speak. Right now, you know the fire drill. It's trading out at 23.44. Gold's back 850. Silver's down, and nickel right now. So a bit of a recovery off of the morning lows. Leading the charge here to the upside dollar-wise, it is Argenix, up $5. That's 6.5%. Shire PLC up nearly $5, 3.7%. Brunswick Corp, you know, the bowlers out there. BC, that's up 8% or $4. Itron up $4. So a lot of fours to the upside. To the downside, no fours. I'm sure there's fours, but not on my board. They're all big numbers. You've got $20 to the downside in Amazon. Google's off 19 and change. Align Technologies is down 13. Booking Holdings down 11. Portola Pharmaceuticals down $11. Intuitive Surgical down 10. AutoZone off 9. So some big movers to the downside. So where do we begin? Actually, I think where we began, I got a question. I have two questions so far that have come in. One came in fairly early this morning. It was from Kevin, and Kevin wanted me to take, I'm paraphrasing now because I don't have the question in front of me on my phone, but basically wanted me to take a look at the NASDAQ 100, and the question was how what was the exact question? Was just trying to gauge my level of comfort that the NDX 100 is not going to go back down and test its lows out there. So let's go take a look at what it is that we know, and I want to try to take a look at this really step by step. So I want to take a look at the larger picture, but the larger picture I've got to incorporate a number of different things for. So the first thing that I'll do on this screen here for each of you out here is this is a picture of the Qs. And we're looking at a picture of the Qs specifically because you can do this on your screen, on your chart out here. And this is where we're going to go take a look at volume. The volume that we had a few weeks ago, this is the week that began on February 5th. The volume there was 522 million shares. That is the most volume that the Qs have seen since the trading week of August 8th, 2011, when there was 838 million shares out there. That is a capitulation low. Yes, we're moving lower. We're retracing. Are we going to go back and test the bottom of that level? We'll take this one step at a time. We don't have to, but what the Qs do, this is a weekly basis. You go take a look at it on a daily basis. The Qs make bottoms with high volume. You can take a look at the green arrows on my chart. Sometimes we go back and test those lows. Sometimes we do not. If you take a look at, for example, if you believe we're going to go test those high volume lows, and you are of the belief right now that we're going to get back to the November 12, 2012 level out there, 284 million, nowhere near the 500 plus million that we did a few weeks ago. But go back and take a look at it. Does it always work? And the answer is no. I have not yet found a tool that works 100% of the time. This is about mastering probability, right? This is about being able to put the odds in your favor. And it's just so important to understand the dynamics of the NDX 100 specifically and the Qs, because other ETFs don't necessarily make this same pattern. And the specific question was about the NDX 100. So go back, put this, I suggest that you do this on a daily basis, on a weekly. It's just very easy for you and I to take a look at a fairly long period of time. I mean, we're going back 7 years to see how the Qs go ahead and form their volume. Years ago, I created a tool and an indicator called the Rhodes Momentum Trading Strategy. I still use it. We don't talk about it often enough, or very often out here, but let's go ahead and talk about it today. It is a tool that really helps you understand momentum. It's really important to understand momentum for different time frames. Right now, what I have on my chart here is the monthly time frame for the NDX 100. Now, added to this chart happens to be Stevie's red line. So let's just say the worst case scenario is that price is going to pull back to 200 points more, 65.77, and actually test Stevie's red line out there. Now, what you actually see on my screen at the bottom, you see some squiggly lines that are in blue and that are in red. And you see some boxes that are green and red. Not blue and red, but green and red out there. Think of Stevie's tool here as the EKG of the market for the time frame that you're taking a look at. Because a normal market, or your normal EKG, if it's anything like mine, you kind of, it's a sine wave, you go in between a bottom and a top level. In this case here, their mark is 80 and 20. For the market, and it's normal to go up and down. When you are not able to push down to the 20 level, or as soon as you push down into the 20 level, you'll see a green box will form. That green box is just simply letting me know that we have gotten down to the lower threshold level of Stevie's Rhodes Momentum Indicator tool, and you take a look at where was the prior green box formed. If it was below, you're going to simply have a letter that says, hey, we're in an uptrend. No big deal out here. And this would also say that as soon as you see a close above that specific candle, that's a signal to add more to your position. When you see the red boxes out here, same thing, you're trying to determine whether you're an uptrend, downtrend, or you might see a C on here for a consolidation move. We're not going to get into the details about this, but when you just see these red boxes, which is all that we have seen inside here, what this is telling us is that there is nothing but buying pressure. So when we take a look at the monthly chart for the NDX 100, even with last month's drop, you didn't see a green box. There's been nothing but buying pressure inside the NDX on a monthly basis. We'll continue looking at the chart, looking at different time frames that will give you different results. And we're going to answer Kevin's question as best we can. Steve Rhodes with TFNN. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're going to switch from the monthly chart for the NDX 100 and switch down to the weekly time frame. And here we're going to see what the Rhodes Momentum trading signals are calling for here. Again, what we're looking for are the green and red boxes out here. You're going to see that and the way that the red signals will work, those are all happening up at an upper threshold level. Just simply tells you buying pressure, buying pressure, buying pressure. That when you see that, it says, it just is telling you about the momentum. Momentum begins to shift when you start to see a close below the bottom of one of those red boxes out there. And we did see that. This is a weekly chart. Let me get a crosshair out here. We did see that the week of February 2nd. We saw a move lower. Monthly chart, no damage done. Weekly chart, really no damage done other than price did get below Stevie's red line. Still, though, on a weekly basis, no green box. Very interesting. Still was telling us, even on a weekly basis, about the buying pressure inside of the NDX 100. We switch over to the daily time frame out here. The daily time frame, here's where you're going to see how those signals change, right? Well, I can't say right. This is what I'm seeing if you're watching this on TigerTV. And the first time you got one of those signals where the EKG pushed down to the bottom threshold area was on February 5th. And then as soon as there was a move below that level, then you started to see a downtrend. You see the green box went from letter U to D. It was in a downtrend. There, the signal says, okay, there's no way you're going to buy until you see a close above that downtrend candle. That actually took place on February the 14th. That was a Valentine's Day gift. Price went ahead, closed above Stevie's red line the next day. You'll see right now prices trading below Stevie's red line of 68.36. If the NDX closes below that level, it's going to change, by the way. Right now it says 68.35, so you got to use that as kind of a guideline number out here. You close below Stevie's red line, says you've got more retracement that's in play. Of course, there was I don't know, there was a gap out here. Says more retracement. Does it say you're going all the way back to the lows out there? No, it does not say that. But it does say, hey, you got to bring that into play. So that's daily, weekly, and monthly signals using the Rhodes Momentum trading strategy. What would we summarize? Longer term on a monthly basis, no problem out here inside the NDX 100. Weekly basis, no problem out here. Daily basis may be signaling a further retracement. So what do we go to next in order to be able to say, hey, there's something like more of a further retracement coming. Well, one of the things that you and I would do is come take a look at what is the actual market breadth for those issues inside the NASDAQ 100. Since we were talking about weekly, and that's the largest time frame we have for this, we're going to be paying attention to what does this signal say to us come the end of tomorrow's trading session. Right now, we're sitting at a slight cross, bearish cross. Right, on a weekly basis. Well, I say right. What I mean is that there are 31 issues trading above the top of their weekly profile. There are 32 issues trading below the bottom of their profile. So just a slight edge right now. This thing has been teetering really just for the last half hour out here. So we'll have to see how the day and the week ends. If you get a bearish crossover, what is its message? Its message would simply switch to bearishness. It would say, oh, yeah, on a weekly basis, you've got more of a pullback coming. Now, this is a cool thing both for bulls and bears to be at this precipice, so to speak, because what this is really saying on a weekly basis, and I don't do this very often, just because I don't want to really confuse you, but I'm going to add the box of the blue line, which is the number of issues trading in between. And the number of issues trading in between are a higher percentage than those above or below the box. So this is almost more of a sideways-ish type of move, bearish to sideways move inside the NDX 100 on a weekly basis. If we take a look at the daily basis, hey, on a daily basis, you have 47% of the issues are trading in between their box, consolidation in essence, 23 above and 35 below. Bears have the edge here. So what does that mean, and where do we go to try to figure out where price might be pulling back to? Doesn't answer the question, is price going to go ahead and test those lows, but where would price pull back to? What I do is then go take a look for some help from the market profiles. So as we take a look at those, we put these up on the screen here. We're going to take a look at a 30-minute, a 60-minute, a 240-minute, a daily, and a weekly. And we take a look at a daily. The problem for it is that this is a super wide box. When we say wide, the top of the box is 68.23. Watch for today's close. If price closes below 68.23, says, okay, you've got more retracement involved. And when I said wide, the bottom is 62.46. That is a 600-point box. It is a biggie out there. But where would price first target on a pullback? We can see, and taking a look at the 30, the 60, and the 240-minute, prices down below any kind of level of support. We have to look at Stevie's other charts to see if they're what letter, what wave we might be in, whether price moving lower with less relative energy. We have to take a look at those. We can't see those on this chart. But here we would say that price would be targeting the center line of its box. And it basically is the center line, which is 65.75. That would become your price target on any close below 68.23. 65.65, so we've got a 10-point difference out there, happens to be the top of the current weekly profile. So we know that if we get a bearish crossover come tomorrow, and if it happens today, you kind of you err on the side of what's the market of the message right now. That would become your target area inside of the NQ. At 65.75, does that get us back to the lows? The answer is no. IamConfused.com. Why? Well, tell me what your confusion is. I'm trying not to confuse you. I'm trying my best. So no buying here on the NQ right. I would say in looking at these charts, the answer is yes. We've got to go take a look at some of those other time frame charts to do that. Right now, just stepping down because we've gone from take a look at market breadth, coming from us from our TAS market profiles, to then saying, what are the actual profile levels on the equity futures contracts, and looking for some some levels of support and so forth. Doesn't tell us where we're at in the wave count, doesn't tell us if price is moving lower with less relative energy out here. But just trying to step through this one thing at a time. Look, subscribers of Mastering Probability and myself went long at the bottom, and we've shared this with you. We went long at the bottom inside the technology sector, the XLK. We did that because as the bottom had formed, we had a number of bottoming signals. The XLK did not have a bearish crossover on its weekly profile. It was the only one of the sectors inside the S&P 500 to have such a pattern. That went ahead. Our target, let's just come take a look at it just so you can understand what we did out here. Our target in the XLK, it might be here, I don't know if it's here or not, was getting back to its highs. Let me put this on a daily basis. So we entered the trade, we did a reward to risk on this. When we got in, it was somewhere around the 60, what was it? It was the open right here. So it was 64.21. That was our entry price. Our target was getting back to its highs, 69.19. Well, it got back to its highs and then some. But we didn't close it out right then and there. We did close it out yesterday. I'll tell you why. We come back from this break. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the reason that we closed out our technology sector long trade yesterday, nice gain, I think reward to risk, as far as capital invested was like 2.5 to 1, was simply because we saw bearish crossovers on the market breadth, on the weekly, the daily, as well as the 240 and 60-minute chart. We saw that at 3:30 last night, and therefore we said we're going to go ahead and take our profits and close it. There's no way that the one sector S&P 500 technology sector was going to hold up all of the other sectors. The odds were not in their favor of doing so. Inside the S&P 500, for the intermediate term time frame inside the newsletter, we switched that to bearish this morning. And we did that because of this market breadth crossover. But still, if I take a look at the weekly time frame chart, you've got it's almost split. You've got as far as percentage of stocks above the box, below the box, and inside the box out here. So, but still, nonetheless, still bearish. That was the reason that we changed it. Now, back to the Qs out here, because, I haven't really fully answered the question. And we have to take each of these things one step at a time. Look, I believe it's incumbent upon each of us to always take new information that the market gives us to make our decisions, and it's respectively for their different time frames out here. We tried to have a longer-term time frame inside that trade, and once the weekly switched over to bearish from a market breadth standpoint inside of the S&P 500, it was there was no reason for us to have to give back those gains and deal with praying and hoping and so forth. It was a nice trade. We'll find another nice trade out there. Let's take a look at the horizontal trading range levels out here, because to a certain extent there's been very little damage inside of the NQ. Again, we'll start the NDX 100. And we'll start just simply by taking a look at its monthly set of horizontal trading ranges out here. What we can see is price right now is trading at about 67.80. It's pretty much near the midpoint of the trading range that it is in right now. And that trading range is 64.23 at the bottom and 72.33 at the top. So even on a really nasty pullback out there, I would anticipate that it's the 64.23 level that will hold as support. Again, this is looking at monthly. We take a look at the candle that was formed last month. This was not a bearish candle by any stretch of the imagination inside the NDX 100. So bigger picture here says price is as likely to get up to 72.33 as it is to 64.23 out there. That's a wide spread, but those are the horizontal trading ranges inside of the NDX 100. When I take a look at the weekly time frame chart, these are the green lines on the screen out here. Right now, price is above its range. Its range being 67.26 at the low. The high, which it has not gotten to, would be 7,600. Again, you're going to get different numbers for different time frames out here. The reason is because they're taking the same data, but not using the same data points. A weekly chart is always looking at the weekly opens and closes of its sessions. The monthly open and closes of its session. The daily open and closes of its sessions. But these horizontal trading ranges are really helpful at identifying levels of support and levels of resistance. And at this stage here, this week, we want to be watching 67.26. So then, Kevin, I would suggest to you, if we see a close inside the NDX 100 below 67.26, and you're asking me what's my degree of confidence that we will not go down and test those lows, it will have decreased because price will have broken through a level of support. And on the daily chart out here, just again, one step at a time, the level that has to be broken is 66.04. In fact, it's really been, again, the little dashed lines on the chart that you're looking at out here, those are the midpoints for these horizontal trading range levels. If I turn those off, and the numbers to the side, to the right side, are telling you how many times price has either opened or closed at that area. But if I turn off those levels, let me just turn these things off, midpoint lines. Let's get there we go. The dailies have really worked well at identifying both resistance and support inside of the NDX 100. So I'm going to finally summarize this for you. The NDX 100 will not go back and test its lows unless you see a close below 66.04. Then if that occurs, it opens up that door to go test that candle session somewhere. And that is Stevie's thoughts on the NDX 100. It's the only way I know how to do it, which is to take things one step at a time. Now to another question that came in, which was, hey, Steve-O, I think that ES Mini on the 2-hour time frame is singing in the key of G. And sure enough, it is. And the question is, what do we do now? Well, first on the 2-hour time frame chart, you cannot get a confirmation of that 7th wave move until the next 2-hour session. This one doesn't complete until 2 p.m. And then what you'd have to see is a higher low coming into the 4 o'clock time frame. So we don't know if this is the 7th wave or whether the 7th wave is going to come at 4 or whether it's going to be at 6 or 8 or 10 or what time it's going to be. But we are at this stage of the game in a 7th wave move. We know that when the high was made out here, in fact, it was it the all-time high? I can't remember, it was just the last high out here. Yeah, it was just the last high inside the ES Mini. It also got up to wave number 7. But see, the key here was we also had another pattern that had formed. That pattern was price was moving higher, doing less relative energy. You like to see a couple of patterns that come together at the same point in time. We don't have that just yet. But what we do have is you have an A to B equals CD pattern. We can see that clearly out here. That is what this looks like right here. And as we go measure things right now, we're in that 1 to 1.618 A to B equals CD range. We're back here testing the low from the trading session of about 2,200 hours, and that is on the 22nd. Yeah, it's the 27th. On the 21st of February out here. So you've got a 100% move of a move. Let's just pull this back a little bit further. So you've got a 100% move of a move out here. So what do you do? I don't think you do anything just yet. What would need to be done on the 2-hour chart, and then you'd really have to start going down and take a look at a 30-minute chart, and we'll go ahead and do that because you've got to look at some shorter-term charts out here to see if there's any kind of turn whatsoever. You don't do anything just yet. You'll get a confirmation that there's more than just that. There's at least a counter trend rally, at a minimum a counter trend rally, if you were to see it close above Stevie's red line. Currently, that's at about 27.1050 out here. Not until then would it be suggesting that, hey, that 7th wave move has really got some move back to the upside. So at this stage here, the thing that you've got to do is just simply come back and take a look at some shorter-term time frame charts. You also want to know what's going on inside of the other charts out here. And Maria, in the case of the NQ, it's only in wave number 6 when we do its counting. So it hasn't done wave number 7. And by the way, even though you're in a 1 to 1.618 A to B equals CD to the downside, you don't have any type of bullish reversal signal. Dow's off 304, S&P down 25. We'll look at that 30-minute chart. Then we're going to go look at gold for Peter in Park City, freshly back from your favorite place and mine, Maui.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at the ES Mini. And the question was, because of it being in wave number 7, letter G out there, what do we do? So what we're doing is we're investigating the shorter-term charts as well as the longer-term. We're trying to identify possible places of support out here. And so what we do is we put up this set of market profiles. Again, the same ones, 30s, in this case here, 3120, 240, daily, and weekly. And so what's interesting about your question, Z, is that if we look at the weekly time frame chart, we're going to see that 2674.50, it says 43, so we'll call it 2674 and 2 ticks out here, happens to be potential support. That is the bottom of its weekly profile. We're 2683, so we're within 10 points, 11 points of that level while we are in wave number 7 out here. So it does give reason to take a look at that level for possible support. Now that box on a weekly basis out here, it's neither bullish or bearish structured out here. So we just have levels of support and levels of resistance out here. Right now we're looking at levels of support. If we come down and take a look at a 30-minute time frame chart, what we're going to see right now is the only thing that we have going, or the only thing that has going for you to give you some type of a signal of a possible short-term bottom, is that price is moving lower, doing it with less relative energy out here. But in order for this pattern to get the hair on the back of your neck standing up, you need to see some type of bullish reversal signal. Doesn't look to me like it's going to occur by 2 p.m. It's at 1:43 right now, but it could at 2:30, or it could at 3, or it could at 3:30, or it may not at all. But if you were to see this pattern continue, see a bullish reversal signal, and probably the closer you get down to that level of 2674, well, then the better you are at being able to determine what do you do. And why do you want to determine what it is that you should do? Well, for a couple of reasons. And I don't know where the day's session ends. But right now, as we speak, you've got the spot volatility index up 17.78%. In fact, you have the spot volatility index trading at 2334. Its 3-month counterpart is saying, what in the Sam heck are you doing? Because it's trading at 21.99. Yeah, below it. So again, right now, the spot volatility index, and you're looking at my screen in the lower left, is trading above every futures contract. That takes us out to November. November's spot volatility index is at 1828. October, 1834. September, 1823. You see a problem out there? Yes, that is a problem. That is a dislocation. That is an overshoot out here. Doesn't mean that it can't get more overshot. But you put that together with a one-day rate of change greater than 10% out there, you're going to get a bounce or bottom inside of the ES Mini. So my take is watch that lower level on the weekly, watch the shorter term chart out here, and then really tighten that stop up overnight. Because the last time we had a one-day rate of change greater than 10%, you got a 22 or 23-point move off of that low. And that is probably not the type of bounce that you want to see take place out there. So hopefully that answers your question. What do we do about that key of G on the 120-minute chart? Now for Peter in Park City, who was in Maui. That's a big change out there in temperature. Let's go take a look at gold. And the question was, what's gold doing, I believe, in euros and so forth? If we take a look at Goldilocks out here, first, we're just simply going to take a look at what is gold doing in dollars and what do we need to watch out here. The question that I put so many other tabs out here that it may take me a moment to find that specific chart. Here we go. Okay, it wasn't too long. So here's gold priced in dollars, taking a look at the 60, the 240, the daily, and the weekly time frames out here. And what we can see, most importantly, is that price is below the bottom of its bullish structured profiles on the daily and the weekly. The price with regard to its profiles of 13.1350, 13.1960 were very important to hold out here. Now, I don't know if gold will bounce from here. We can go take a look at some intraday charts, try to find something. But closing below the bottom of these boxes on both of those suggests lower prices. Lower prices to where would be a question out here. Now we'd have to go back and try to do some other retracement or A to B equals CD profile work out here. But the message of gold right now had switched to bearish. I switched it to bearish this morning as soon as I saw prices closing below 13.50. That's what gold is doing in U.S. dollars out here. If we go see what gold is doing both in dollars and euros, give me a moment. Here's gold priced in euros and dollars out here. The bottom chart is gold priced in euros. And you can see that it's turned down. So if you're going to go buy a 1-ounce coin net of premiums that you would have to pay, you'd be paying 1,070 euros. Whereas in dollars, U.S. dollars, you'd have to take with you $1,307 out there. So they're both turned down. And both turned down says that's not a good thing with regard to where is the direction in gold. If we go take a look at a short-term chart for gold, let's pull that over here. By short-term, I'm referring to a 30-minute time frame chart. You know, is there anything that I see that is in the works? We're going to turn this A to B equals CD to the downside off, and the answer is no. I don't see anything. We're well below the zero line of its price oscillator. We're below Stevie's red line. So there's not any pattern out here, Peter, that I see that says, hey, maybe a bottom is forming. That's what the 30-minute time frame charts show me. Let's go take a look at a 2-hour chart, see if there's anything else out here. And on the 2-hour time frame, I've got nothing either. You'd at least have to see price close above 13.10 for any type of a glimmer of hope that you would get a bounce to about 13.20. So gold is looking like it wants lower price. And by lower price, what are we going to come up with? Let's take a look at this 120-minute time frame chart. And from here, let's go ahead and draw the A to B equals CD pattern so we can have some price projection areas. And those price projection areas, well, you've got the 1-to-1 at 13.01 out here. But more likely than not, gold likes to overshoot its levels. So 13.01 to 12.90 would be the two price areas that you would be looking for. So, Peter, in Park City, formerly Maui, I don't see a bottom in gold, not just yet. Question that comes in, does the full moon have any impact today, in my opinion? You know, I used to do a chart out there. I would take, I don't have it on, I don't know, I don't think I have it on this system out here. And full moons, which you've got a full moon coming in this evening out here. What time? Around 8 o'clock, something like that. 8, 9 o'clock is when the full moon is coming in. Full moons had tended to be and can be an acceleration move for gold. So the answer to your question, Tuck, it'd be maybe. And if, in fact, gold did find a bottom and it started moving higher, that would really answer your question. But right now, there's no pattern that's in play that I can see at this stage to say you should step in front of the gold train as it's moving lower. Steve Rhodes with TFNN. Great.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we've got their 2-minute countdown out here, and Ruby wants to go ahead and take those last 2 minutes and take a look at silver futures. So if we do that, here's the first thing that, Ruby, that you and I should take notice of, and that is that today you are seeing silver futures trade below the bottom of its daily TAS market profile. That's at 1633. Now, I don't know where this ends. If price closes above 1633, really we'll call it 1634, then support will have held. And that's the support of a bullish profiled box out there. Now, that might be a nice clue with regard to silver, because with regard to gold, because silver has been a little bit weaker than Goldilocks. But if price closes below 1633, we will have price below, well, the market profiles for weekly, daily, and the 240-minute time frame. We will not be below the low of the 60-minute time frame, which is 1621. So that being said, let's go figure out what silver is doing on a 60-minute time frame out here. Can I do that? No, I can't do that. Yeah, I can. Give me a moment out here to do this. We got a minute or close to a minute. Let me see if I can. I'm going to put this on the continuous contract here so that we can try to take a look at any type of pattern that might be out here. And we're going to switch this over to a 60-minute time frame. I did not realize that it would take this long to do it. Okay, so we've got to let this thing do its thing. Then I will switch this chart over to a 60-minute time frame. Oh, I'm doing what I can for you out here. All right, there's our 60-minute time frame. We might run out of time. Just looking for any pattern that I can see out here. And the answer is I don't see anything right now here, Ruby, but I'll just leave it at watch 1634 out there. If you close back above 1634 at the end of the day, I'm not saying take action. I'm saying it's a glimmer of silver hope. Folks, stay tuned. Because if he's not your favorite polar bear yet, he will be. And that's our man, David White. Because it's Terrific Thursday, that means you've got Tom O'Brien from 3 to 4, Andy Heck from 5 to 6. And I'll be back with you on Fabulous and Fantastic Friday tomorrow at 1 o'clock. Take care. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.